Welcome back to Return My Capital. It's time for your weekly Sunday dividend roundup video where we cover any dividend changes announced recently and any upcoming ex-dividend dates in the week ahead, as well as dividend payouts in the week ahead that you can expect. I push this out every Sunday so that you can stay abreast of what's going on with your dividend holdings. So to kick things off, we're going to start out with Cardinal Health, ticker symbol CAH. They will go ex-dividend next on June 1st with a payout date of June 15th, but they did just recently announce the minuscule 1% dividend increase, bringing that yield up to 1.4%. They are a dividend aristocrat with 29 years of payouts. We have a 7% dividend increase from Chesapeake Utilities Corporation, ticker symbol CPK, 22 years of dividend payouts there, now yielding 2.2%, let's say. We've got KLA Corporation, ticker symbol KLAC. Going to go ahead and actually pull this one up for you to see. So taking a look at KLAC here. Now you see over the past year, shares are down 1%. Year to date, though, it's actually done exceptionally well, up 11.3%. Over the past 5 years, though, this is where you start to see the, let's say, outsized performance. Over the past 5 years, up 315%, and over the past decade, up well over 1,000%. It is trading in the lower half of the 52-week range. It's at 701 today. On the low end, you've got 551, and on the high end, nearly $900. Trades with a fairly reasonable 21.5 price to earnings ratio, an annual dividend distribution of $7.60. And a 1.1% yield on this $92 billion market cap semiconductor manufacturing company. You see the revenue has been choppy. It peaked in 2023 at $10.5 billion, was down in 24 at $9.8 billion, but we're expecting over $12 billion in 25 and nearly $12.5 billion in 2026. I mean, look at this EPS growth expected for 2025 here. We're expecting a 36.5% year over year growth to that EPS for 2025, which would represent 23% growth in the revenue, followed by years of 3% and 8% revenue growth expectations. Unbelievable from a profitability perspective on KLAC here. Gross profit margin 60.5%, 32% net income margin. The balance sheet is a thing of beauty. $6 billion in debt, $4 billion in cash. But the focus of why we're talking about it right now is to take a look at the dividend. So yes, not only are they paying $7.60 in an annual distribution, look at this 5-year CAGR. You're talking 14.5% compound annual growth from KLAC over the past 5 years. Has been growing its distribution for the past 15 years. So another decade to go until it's a dividend aristocrat. So yeah, $1.90 quarterly distribution, and its next ex-dividend date will be May 19th, with a payout of June 3rd. So quarterly distribution, you see dividend growth history chart here. It is steady up and to the right. It has an outlier, must have been a special dividend distribution in 2014 of $18.40 for that year. But starting in 2015 here, you're looking at $2.04 annually. 10 years later, you were at $6.05. And now you're rapidly approaching $8 from an annual distribution. If we look at that dividend growth, again, 3-year CAGR of 16%. Unbelievable. So they're actually accelerating the dividend growth recently at KLAC, which makes sense when you see the underlying metrics. But that 10-year CAGR is almost 12.5%, which is great. But then you see them accelerating it recently. Over the past 5 years, again, 14.5% compound annual growth to that dividend. And then over the past 3 years, accelerating to nearly 16% annual growth, which explains exactly these yield on cost metrics. So you're seeing your 1-year yield on cost slightly below 1%, but because of the rapid dividend growth acceleration, your 3-year yield on cost is almost 2%, and then your 5-year yield on cost would be 3.7%. So that's the beauty of what dividend growth can do for you. Moving on, we've got Pepsi. They recently announced a 5% dividend increase, which honestly is more than I was expecting. I took a look at Pepsi not too long ago, obviously a dividend king, and the balance sheet isn't great. The payout ratio is pretty elevated on Pepsi. Actually, let's just take a quick look here so you can see for yourself. Yeah, I mean, I know it's a dividend king, but you look at this 5-year CAGR, it's at 7.25%, but the payout ratio 67.5%, so healthy enough, I suppose. But 48.5 billion in debt, 8.5 billion in cash. You look at the dividend growth history chart; it is nice. But anyway, yeah, I was surprised to see a 5% dividend increase for Pepsi, moving that quarterly distribution from $1.35 per share to, let's say, $1.42 per share. Now you look at the yield. I mean, Pepsi is now up to a nearly 4.4% dividend yield. And I can't personally ever remember a time seeing Pepsi paying such a high distribution. From a percentage perspective, you see from a valuation perspective, shares are getting pretty cheap here at 16.4, well below market averages, as the price is down well over a quarter over the past year. Over the past 5 years, you're negative, and over the past decade at this point now, you're only up 33%, trading at the bottom of the 52-week range. I mean, year to date, you see we're just making new lows still. So things have not been going well, but because of that, you've got a 4.4% yield on Pepsi now. I mean, might be an attractive entry point. If had you invested 5 years ago, your yield on cost would be over 4%. Let's see. I mean, the dividend growth has still been there. They're obviously committed to it. Your 10-year CAGR is 7.5%, but your 3-year CAGR is over 8%. So they've been growing it at a very healthy rate. But that being said, that's Pepsi. Their next ex-dividend date will be June 6th with a payout of June 30th. And I think that covers everything I wanted to talk about from a dividend increase perspective. We did have 2 cuts recently announced. Arbor Realty Trust, a REIT, it was a 30% cut, and ABR is the ticker symbol there. They cut it from 43 cents per share to 30 cents per share. And then a company called Manpower Group, ticker symbol MAN, cut from $1.54 down to 72 cents, which was a 53% cut. So never like to see that, but got to take care of business here and announce it when it does happen, because it's not super common. So that is it for the dividend changes. We'll get into the ex-dividend dates for the week ahead. Again, we're covering May 12th to the 16th. And so Monday, May 12th, these are companies that are going ex-dividend date on the 13th, which is Tuesday, meaning you need to own them by close of business on Monday if you want to participate in the upcoming distribution. You've got American Waterworks Company, ticker symbol AWK. They will be paying out on June 3rd, 2.25% yield there. Shares are $147, 18 years of distributions on that utility. That's truly best of breed for water utilities if you're interested in investing in that sector. You've got Arrow Financial Company, ticker symbol AROW. They will pay out on May 23rd, 28 cents per share coming your way, 4.3% yield on that financial, which is a dividend aristocrat. We've got Visa. They will be paying out on, what is that, June 2nd, 59 cents per share. Shares are up to $352, so just a 0.67% yield on Visa. Let's actually take a look at how they've been doing. 17 years of distributions as they move towards aristocrat status. Over the past year, Visa's up 26.5% year to date, by far beating the market, 11.5% performance. Over the past 5 years, up 92%. And over the past decade, just up a cool 407%. Certainly towards the top of the 52-week range. Again, 352 today. Top of that range is 366, elevated price to earnings ratio with this extremely stable business. But again, because shares have performed so well, just a 0.67% dividend yield on this $660 billion payment processing company. You see the revenue there, very steady gains year over year. You look at the EPS growth expectations. I mean, it's 12 point something percent for the next 3 years on EPS. Revenue, 10% growth for each of the next 3 years. It's like a watch. You can set the earnings are, yeah, you can set your watch to whatever. Terrible analogy. 20 billion in debt offset by 14 billion in cash. So great balance sheet. Payout ratio 21.5%. I mean, it doesn't get any better than this from a dividend growth perspective, right? 15% 5-year CAGR on that distribution, $2.36 annually. Dividend growth history chart. I mean, look at this. This is as good as it gets. 2014, they were paying 42 cents annually. A decade later, they were up to $2.15 annually. Just fantastic dividend growth metrics here. 10-year CAGR of 17.5% growth. Unbelievable. 3-year CAGR just under 17%. This is something where, your yield on cost, while the dividend yield is minimal, you see how it can grow over time. Your 5-year yield on cost would be 1.2%. So sorry for the side tangent there. The last company for Monday with the ex-dividend date of Tuesday is Essential Utilities, ticker symbol WTRG. Their payout date will be June 2nd, 32.5 cents per share for a 3.2% yield on that dividend aristocrat utility. That closes the book for Monday. Talking about Tuesday, companies you have to own by end of day on Tuesday because their ex-dividend date is the 14th, which is Wednesday. You've got Consolidated Edison, another utility, big in the Northeast and the Midwest. Their payout date will be June 16th, 85 cents per share. Shares are $8, so a 3.16% yield. Dividend King, 51 years on Consolidated Edison. We've got Target. Their payout date will be June 1st, and shares are a little bit under $100, but a 4.65% yield on Target, 57 years of distribution. So surprisingly, Target is a dividend king. We'll see if that continues. You're looking at the 1-year performance, down 41% for Target, down almost 20% on the 5-year, and out over the past 10 years. You saw the pop back here in 2021 during the pandemic time. Shares were trading up near $261. Today, $96.40. Lower half, certainly, of the 52-week range. The high end would be 167. The low end is 87. Price to earning, I mean, about as cheap as you'll see, 10.7 on the PE. Dividend yield is 4.65%, a 3.6% short interest on this $44 billion market cap retailer. Certainly significant concerns from a tariff perspective, as well as a economic health of the consumer perspective. Looking at that dividend, the payout ratio still only 50%. So a healthy payout ratio, but you have to keep in mind that this is not a high margin business. You look at this, I mean, net income margin is 3.8%, gross profit margin only 28%. Balance sheet, you're starting to get pretty elevated here. 20 billion on the debt. It's only a 44 billion market cap. You do have 5 billion in cash, but the dividend growth has been healthy, right? So 11.2% 5-year CAGR on the dividend, 50% payout ratio. So the dividend growth history chart is solid. Back in 2014, $1.90. 10 years later in 2024, $4.44. So if you're willing to, dip your toe into these waters where shares have been beaten down and you're confident in Target's future, you are getting a over 4.5% yield. Last company for Tuesday is WC Energy Group. Their payout will be on June 1st, 89 cents per share, 3.3% yield there. Moving on to Wednesday, May 14th. Got to own these by close of business because their ex-dividend date is Thursday the 15th. You have Church & Dwight, ticker symbol CHD. Their payout will be June 2nd, 29.5 cents per share. Shares are $91.50, so 1.3% yield on Church & Dwight. 29 years, so dividend aristocrat. Let's take a look at Church & Dwight. If you're not familiar, they do make some products that you would recognize, certainly. So if we take a look at a couple of their brands, Arm & Hammer, you probably have them beneath your kitchen sink. Stain remover, cleaning solutions, laundry detergents, and bleach. So OxyClean. What are some other Trojan condoms? So very, very common consumer staples. Founded in 1846. I always get a kick out of that. But you see the sales growth flat in 25, 3.5% revenue growth expected in 26 and 27. Not terrible profit margins, but I mean, it's a consumer staple, so nothing crazy. Talking 10% net income margin, 22.5 billion market cap, 2.5 billion in debt, 1 billion in cash. But Low on the payout ratio, 33.7%, 5-year CAGR, let's say 4.5%, 20 years of dividend growth. 2014, the annual dividend was 62 cents. 2024, $1.14. So anyway, that's a company you would have to own by close of business on the 14th if you are looking for, a consumer staple. If you're fleeting to safety, let's say, certainly people are going to continue to buy some of those brands. You also have for Wednesday, Cintas, ticker symbol CTAS. Their next distribution will be on June 13th, 39 cents. Shares are $215, so just a 0.73% yield on that Dividend Aristocrat. You've got Coterra Energy, ticker symbol CTRA. May 29th will be the payout of 22 cents, 3.8% yield on Coterra. You've got Eversource Energy, ES is the ticker symbol, June 30th payout. So you're going to have to wait a while for that distribution. 75 cents coming your way per share owned. Shares are $63, so 4.8% yield on that Dividend Aristocrat. We're sticking with the energy. Diamondback Energy here, ticker symbol FANG. Kind of a funny ticker symbol for an energy company, but FANG. Let's see, May 22nd payout, $1 even for a 2.9% yield on Diamondback Energy. You've got Gorman Rupp, ticker symbol GRC, June 10th, 18.5 cents per share coming your way, 2% yield on that Dividend King, 52 years of payouts there. Kroger, ticker symbol KR, June 1st will be the payout of 32 cents. Shares are $72, so just under a 2% yield on Kroger, which is the largest grocery store company, I think, in America. It's up actually almost 31% over the past year, up 113% over the past 5 years, currently trading at the top of the 52-week range, which is $73.60. Shares are currently, let's say, $72. 15 on the price to earnings ratio, which is fairly elevated for a grocery chain, because when you look at the margins on this type of business, net income margin 1.8%, which is just brutal, but 23.5% gross profit margin. I think they had tried to do that Albertsons merger. So you see the $25 billion in debt, which is fairly significant considering it's a $47.5 billion market cap company, $4 billion in cash. From a dividend perspective, though, 17 years of growth, 15% 5-year CAGR, which is fantastic. Obviously, payout ratio is only 28%. It's just kind of concerning to see that debt load and obviously the 2% net income margin. But in 2014, Kroger was paying 34 cents per share annually. Now, 2024, $1.22. Moving along for Wednesday, the 14th, we just talked about Kroger. You've got MSA Safety Incorporated, ticker symbol MSA. June 10th will be the payout, 53 cents per share, $158 on the share price. So just a 1.35% yield for MSA, but 54 years of payouts, Dividend King. You've got Middlesex Water Company, another utility, MSEX is the ticker symbol. June 2nd payout, 34 cents, 2.25% yield. Microsoft, maybe you've heard of them. MSFT is the ticker symbol. June 12th will be the payout, a 0.76% yield. But I mean, we can take a look real quick at Microsoft from a dividend growth perspective here. 23 years of increasing their dividend distribution. You see shares were recently trading down as low as $354. They reported earnings, a week ago. They were fantastic. Shares popped up to, let's say, $440. So big move from a share price perspective on this $3.25 trillion market cap company. Obviously, no short interest. So 0.76% yield, $3.32 in terms of a annual distribution. 25% payout ratio on that dividend, over a 10% 5-year CAGR, 20 years of growth. And so in 2014, that annual distribution was $1.15. 10 years later, it was well over doubled, $3.08 in 2024. Moving along for Wednesday, we've got Pool Corporation, ticker symbol Pool, P-O-O-L. It's appropriate, I suppose. May 29th payout of $1.25. Shares are $302, so a 1.66% yield on Pool. We've got the TJX companies, another discount retailer. TJX is the ticker symbol. Good choice. June 5th will be the payout, 42.5 cents per share for a 1.33% yield. Thomson Reuters, ticker symbol TRI, June 10th, 59.5 cents per share, 1.25% yield on that Dividend Aristocrat. And to close things out for Wednesday, you've got ExxonMobil, ticker symbol XOM. June 10th will be their next distribution, 99 cents per share. They need to just make it a nice even dollar for us. $107 on the share price, a 3.7% yield on ExxonMobil. Over the past year, shares are down almost 10%, maybe some tariff concerns. Although I'll tell you what, with all the return to work orders for some of the largest companies in the world, or I guess I should say return to office mandates, and certainly all the government agencies, you would expect those commutes to be driving up the demand for oil as people need to fill up their cars again. But over the past 5 years, shares are up 135%. I mean, this was coming out of the bottoms of the pandemic, right? You have ExxonMobil down here in the low 30s. Now it's up to 107. So that was obviously a great buying opportunity. You see that spike down back in 2020. Golly. So 3.7% yield on ExxonMobil, the largest oil and gas company in the world. I guess largest energy company in the world, at least publicly traded. Probably doesn't hold a candle to that Saudi Aramco, but 52% payout ratio on ExxonMobil, so pretty healthy actually compared to where we've seen it before. Just a 2.2% 5-year CAGR. I think ExxonMobil was actually reportedly pretty close to having to cut the dividend back during the pandemic, but 26 years of growth. So Dividend Aristocrat. But you see the growth is pretty minimal. 270 back in 2014, 384 10 years later in 2024. That closes things out for companies that you need to own by close of business Wednesday. We'll move to Thursday, May 15th. These are companies who go ex-dividend on Friday the 16th. You've got Amgen, ticker symbol AMGN. June 6th payout, $2.38 per share coming your way. Shares are $266, 3.6% yield on Amgen. We also have Duke Energy, ticker symbol DUK, real nice utility down in the southeast of the country. June 16th payout, $1.05 per share for a 3.5% yield on Duke Energy. You've got Emerson Electric, ticker symbol EMR, June 10th payout, 53 cents per share, a little under a 2% yield on Emerson Electric. 68 years of consistently increasing dividends there. So one of the longest in the world for that dividend king. You've got Global Water Resources, GWRS, 2.5 cents per share, 3% yield on that utility. Honeywell, massive conglomerate industrial, ticker symbol HON, June 6th, June 6th payout, $1.13 per share, 2.1% yield for Honeywell. Hershey Company, obviously make all sorts of candies. Go to Hershey World if you get the chance in Pennsylvania. HSY is the ticker symbol. June 16th payout date, $1.37 coming your way. Shares are $170, 3.2% yield on Hershey. Eli Lilly, big pharmaceutical, LLY. June 10th payout, $1.50. Shares are $735, so just a 0.8% dividend yield on Eli Lilly. Moody's Corporation, the big credit rating agency, ticker symbol MCO, June 6th is the next distribution date, 94 cents per share, just a 0.8% yield because shares are $470, 16 years of increasing their dividend payouts. Let's take a look at Moody's real quick. It's been a fantastic performer really since the 2008 financial crisis. But over the past 5 years, up 86%. Over the past decade, up 330%, let's say. Very richly valued at 34.5 price to earnings ratio on a forward basis, 85 billion on the market cap. Revenue growth is solid, mid to high single digits. EPS growth, low double digits, let's say. Dividend growth has been great. 27% on the payout ratio for Moody's, 11% CAGR on the 5-year, 15 years of increases. And then look at this dividend growth history chart. $1.12 was the payout annually in 2014. 10 years later, it was up to $3.40 on Moody's Corporation. To close things out, I Additional companies for Thursday, MSCI, ticker symbol MSCI. May 30th will be the payout date, $1.80 coming your way per share, a 1.3% yield. Shares are $557. Otis Worldwide Corporation, company that makes all your escalators and elevators, ticker symbol OTIS, June 6th, 42 cents per share. Shares are $97, so 1.7% yield. Got spun out of Raytheon when Raytheon became RTX and spun out Otis and CARR, CARR, which is, I think, what does CARR do? Are they big into refrigeration systems or AC units, I believe? Starbucks, also need to own them on Thursday if you want to participate in the upcoming distribution. Ticker symbol SBUX. It's been much talked about, but obviously shares have struggled the last year or two. Their next distribution will be on May 30th, 61 cents per share coming your way, $80 on the share price, currently a 3% yield on Starbucks. It's not too often that you see Starbucks with a 3% yield. Sherwin-Williams, ticker symbol SHW. I think Sherwin-Williams might be the largest company in the materials sector. Shares are $352. Next payout will be June 6th, 79 cents per share, 0.9% yield. Sherwin-Williams has been a great performer over the years. If you're not familiar with them, they're, I think, the leading paints company. So up 10% on the 1 year, 89% on the 5 year, 262% on the 10 year. JM Smucker Company, your jams, your jellies. SJM is the ticker symbol. June 2nd will be the next payout, $1.08 per share, almost a 4% yield on JM Smucker on that Dividend Aristocrat. And lastly, for Thursday, you've got Wingstop, ticker symbol WING, W-I-N-G, June 6th payout, 27 cents per share. Shares are $267, so just a 0.4% yield on Wingstop. They were a beast of a performer for a couple years, but they've been getting hammered recently. Over the past 1 year, down 33%. Over the past 5 year, even with this recent 33% decline, still up 111% on the 5 year. You see back in 2024, shares were up over $400, almost $420, $267 today. So I guess at least, if nothing else, it's pushing that dividend yield up. Moving along to Friday, May 16th. So you need to own these companies by the end of the week because they go ex-dividend on the 19th, the following Monday. You've got Brunswick Corporation, ticker symbol BC. They make grills and cooking tools and utensils. They will pay out on June 13th, $43 cents per share. Shares are $48, so 3.6% yield on Brunswick. ConocoPhillips, big energy company out of, I think, the UK, ticker symbol COP. Their next payout will be on June 2nd, 78 cents per share, $88.50 currently, so 3.5% yield on that energy and gas company. Chevron, ticker symbol CVX. Man, some big energy companies this week. June 10th payout, $1.71 coming your way, almost a 5% yield on Chevron. That's certainly attractive. 38 years of increasing their dividend payments. KLAC, the company that we spent some time talking about with the big dividend increase recently, they will pay out on June 3rd, $1.90 per share after their recent 10% plus dividend increase. Shares are $701, 1.1% yield on KLAC. Phillips 66, keeping with our theme today of energy companies. June 2nd payout, $1.20 per share coming your way, $110 on the share price today. So a 4.3% yield on Phillips 66. Ryder System, ticker symbol R, always cool to see a single letter on the ticker symbol. June 20th, so you're going to have to wait over a month, but June 20th payout of 81 cents per share. Shares are $145, 2.25% yield on Ryder System. Rockwell Automation, June 10th payout, $1.31. Shares are almost $300, so a 1.8% yield. Southern Company, big utility. June 6th, 74 cents, $90 on the share price, 3.3% yield on that Dividend Aristocrat utility. And the last company going ex-dividend is UPS, United Parcel Service, ticker symbol UPS. June 5th payout of $1.64, $96 per share. So almost a 7% yield on UPS, which is pretty outrageous. I wonder if they'll do a cut sometime soon. They just cut a ton of employees. Shares are down 35% on the 1 year, about even up 2% on the 5 year, and down 6% over the past decade. Price to earning 13.5, getting $6.56 annually on that distribution. Not bad from a share price under $100. I'm surprised that there's not a higher short interest, just a 2.1% on this $81 billion logistics company. I mean, yeah, revenue growth is expected to be pretty stagnant for the next 3 years. What's that payout? Yeah, payout ratio is up to 84%. I wouldn't expect this 11% 5-year CAGR on the dividend to continue. That's for sure, considering the $25.5 billion in debt and the 84% payout ratio for UPS. All right, that closes things out for ex-dividend dates this week. Again, we're talking about May 12th through the 16th. We'll close things out for this with companies that are paying you this week. So the best part of the video, right? On the 15th, Apple, ticker symbol AAPL, I think still the largest company. I don't think Microsoft has overtaken them. They will be paying out 26 cents per share owned, a 0.5% yield on Apple. AbbVie, ticker symbol ABBV, big pharmaceutical, split out from Abbott years ago. And they will also be paying out on the 15th, $1.64, 3.6% yield. Speaking of Abbott Laboratories, ABT, paying out on the 15th, 59 cents per share, 1.8% yield. Accenture, ticker symbol ACN, also paying out on the 15th, $1.48 coming your way, 1.9% yield. Agree Realty Corporation, ticker symbol ADC, paying out on the 14th, which is Wednesday, 25, almost 26 cents per share, 4.1% yield on that REIT. The AES Corporation, ticker symbol AES, 17.5 cents per share coming your way, 6.3% yield. Ameriprise Financial, big into insurance and investing and all that good stuff, paying out on the 19th, so that'll actually be the following Monday, but $1.60 coming your way, a 1.3% yield. AO Smith, ticker symbol AOS, paying out on the 15th, 34 cents per share, 2% yield. Colgate Palmolive, ticker symbol CL, paying out the 15th. Golly, a lot of these companies are paying out on the 15th. Going to be a good day for some of you. 52 cents per share, 2.3% yield. Costco, if you're a dividend growth investor, similar to Visa, you don't need any introduction to Costco. Paying out on the 16th, Friday, $1.30 coming your way, just a 0.5% yield on Costco. Enterprise Products Partners, ticker symbol EPD. It's a pipeline company, paying out on the 14th. And when I say pipeline, oil and gas, 53.5 cents per share, almost a 7% yield on EPD. HB Fuller, ticker symbol FUL, paying out on the 13th, Tuesday, 23.5 cents per share, 1.7% yield. Who else is paying us this week? We've got Kinder Morgan, very similar to Enterprise Products Partners, EPD. Again, another pipeline company for oil and natural gas. Paying out on the 15th for Kinder Morgan here, 29.25 cents per share, 4.3% yield. Morgan Stanley, big investment bank, ticker symbol MS, paying out on the 15th, 92.5 cents per share, 3% yield. It's not a bad yield on Morgan Stanley, similar to Goldman Sachs, if you're unfamiliar. Realty Income Corporation, your monthly dividend payer, ticker symbol O, very, very popular REIT, paying out on the 15th, 5.7% yield on Realty Income, almost 27 cents per share. Procter & Gamble, big consumer staple company, paying out on the 15th, $1.06 per share, 2.7% yield there. Who else is paying us this week? Constellation Brands, STZ, paying out on the 15th. Surprise, surprise, $1.02 per share on this beverage, spirits, alcohol company, conglomerate. 2.1% yield on Constellation Brands. Texas Instruments, big time semiconductor calculator. What was that scientific calculator that we all used growing up in school, if you ever took calculus? Paying out on the 13th, Tuesday, $1.36, 3.2% yield on Texas Instruments. And last but not least, Unum, ticker symbol UNM, big insurance provider, paying out on the 16th, Friday, 42 cents per share for a 2.1% yield. That's it. I know this is a long one. Voice is starting to get tired. So we started out talking about the dividend changes. We actually did have a few cuts, but some real nice increases. The ex-dividend dates for the week ahead. If you want to participate in the upcoming distributions, got to lock in that ownership prior to the ex-dividend dates, and then talked about the companies paying you out this week, which is always welcome news. So hope you enjoyed it. Hope you got value from it. Thank you for watching. Take care. Bye-bye.